Well, good morning, everybody. I'm going to talk a little bit about some of the trends we're seeing in clean energy investment and also technologies. So I'm going to run this presentation in terms of there's some stuff that's looking back at what's happened in the past. Now I'm going to talk a little bit about some of the new technology areas we're looking at. Clean energy investment, you may have seen these sort of charts before, but 2015 was a record year for clean energy investment. We saw over $1/3 trillion in that year. When we said at the time this was very much a record, unfortunately, in some respects, the level of investment dropped in 2016. So you might think that was something of a setback. It fell by about 17% for a variety of different reasons. However, the net new level of capacity installations was up 9%. So the reason for this is clean energy is getting a lot cheaper and a lot more economic, and this is a trend that's continued. We don't expect it to stop anytime soon. And that's seen if you look in terms of renewables versus other forms of generation. They're outpacing fossil fuels, outpacing nuclear and large hydros. So it's no longer a minority part of the energy sector, it's very much mainstream. And around the world, we've seen some of the lowest energy prices. These are not typical average prices. They are the lowest we've been able to find. But in Mexico, 2.7 cents per kilowatt hour is astonishing compared with a few years ago. Morocco, 3 cents per kilowatt hour for onshore wind. And offshore wind, with a bit of forward pricing, because this hasn't been built for a number of years, under 5 cents per kilowatt hour from a technology that's only relatively recently been deployed. And again, around the world, we see levels of penetration in terms of clean energy rising. Around Europe, we're seeing levels up to 25–30% in many European countries. China is growing very rapidly, and clean energy is growing as a proportion of the energy mix. And we're also seeing a lot of deployment in Asia and in the US. The number, by the way, for the US of 9%, that's an average. So if you look state by state, you'll see some states where it's very much higher. Now, just a few words on the type of energy that's being deployed within clean energy. This is a similar sort of chart, quarter by quarter, but breaking it down by sector. So the yellow area is the one to focus on. Wind is at the bottom, the blue. The yellow area, you can see how much it's expanded as a proportion of the total. So back in, say, 2008, it was roughly 25–30%. Now it's typically 50 or even 60%. And the reason for that is solar costs have come down even more rapidly than other forms of clean energy. I'll come on to that in just a moment. So just a few quick facts. You know, wind, if you look back in the US, it's been a little bit of a stop-go cycle because of the nature of tax credits that's driven the industry, and they're not necessarily renewed, or people don't know they're going to be renewed until they are renewed, which is why you see those cycles. But up 262% over the last 8 years. And solar up, more than 4,000%. I mean, it's absolutely astonishing what's happened to solar around the world. Now, we spend a lot of time looking at what are the technology drivers for this. So one very important thing is the experience curve analysis. You're looking at learning rates, the rate of progression of a particular type of technology. And generally, the way to read this is for every doubling of the total deployed capacity, how much does the cost fall? Now, I think last time I stood up here, I said for solar, that doubling rate was 24% cost reduction. Excuse me. On our latest numbers, it's actually up to 28%. So solar is falling even faster than it was up until now. The level for wind is about 19%, which, by the way, is also up. When we first did that analysis, it was about 14%. Now, I did want to spend a little time talking about one other area which is very important. It's come up in this conference, and that's transport. We started tracking transport in earnest, EVs, about 3–4 years ago. And these are some of our forward forecasts. There's a lot of uncertainty about this because we're trying to guess, or rather forecast, what's going to happen in 2030 or 2040. But on our latest forecasts, the latest public ones, we're seeing something like 35–47% on a range of assumptions by 2040. We're in the process of redoing this, so I can't yet tell you the new numbers, but I'm pretty sure they won't be lower than these numbers. Now, That's interesting. What's driving that, though, is the cost of lithium-ion batteries. Again, another of these experience curve effects. We've looked back at battery pricing, so we get data from manufacturers and buyers, which are the little triangles on the chart, and then we've used the experience curve technique to forward forecast. And by the way, we built bottom-up an analysis of the technology that corroborates these kind of numbers. So it's not just all top-down, it's bottom-up as well. And our learning rate for lithium-ion is roughly 19%, which means you can realistically see lithium-ion batteries coming down to under 75 dollars per kilowatt hour by 2030. That's a real transformation. It's the major component of an electric vehicle cost, and it will affect the end prices quite significantly. Now, just on the implications for that, the Norwegian experience, why pick Norway? Well, Norway's really interesting as a market for EVs because it's actually one of the highest EV markets in the world. So here, by now, 29% of new sales in Norway are electric vehicles of one sort or another. And 2 years ago, that was only 13 or 14%. So what's been going on here? Because there's clearly been a major transition in Norway. Well, one is around vehicle choices. Now, you could say, well, Norway is a very different market. There's a lot of taxation on vehicles. And that would be true. But it's to such an extent that the price of a Tesla versus an internal combustion engine vehicle, a comparable one, is now after tax lower than the alternative. Now, the way to read this or interpret this, I think, is not, well, this, the reason you get this high number is just because of taxation. The point is, to the consumer, it's now cheaper to buy an electric vehicle than it is to buy a conventional vehicle. And that's caused the point of inflection. So we think when there's a crossover in other markets in terms of the price of EVs, we are likely to see these points of inflection, and the EV industry could really take us by surprise in terms of adoption. I finally just wanted to talk a little bit about some of the implications of this. So we spent a lot of time looking at what are the strategic implications for this in terms of new business models. I'm not going to go through all the business models. We've actually heard about many of them yesterday, and I'm sure we'll hear more today. But just to summarize the forces at work, we're seeing plateauing electricity demand in many markets, increasing renewable generations, which, by the way, is driving down wholesale prices. It's a new type of network. It's distributed. So the growth of solar, it's not just that solar is increasing. It's a more distributed form of generation. Much more volatility and uncertainty, particularly at the wholesale level, about electricity prices. Regulation hasn't really caught up with all of this in most markets yet. And we're seeing intensified competition. So this combination of new technologies, it very much affects the business models that utilities are thinking about, but it also affects the opportunities for new entrants. So we're seeing, I think, a very vibrant mix caused by this technology transition. Finally, I just wanted to say a few words about some of the newer technologies that we're looking at. And on these, I would love to talk to any of you in the room who are pursuing these. So at BNEF, we've focused obviously a lot on the technologies we've all heard about for a number of years, like lithium-ion, solar, wind, and so on. But it struck us about a year ago that actually there were some new technologies, more lateral technologies from other industries, and not just affecting energy, but with the potential to affect industry coming along. So we thought about the strategic challenges, things like how do you manage decentralized resources, customers' needs for greater autonomy, how to manage supply and demand in real time and balance the system, improving asset utilization. Once you've built an asset, you obviously want to get the best use out of it. And finally, the level and certainty of energy costs. And some of the emerging technologies we think will help with this or address this. Advanced power transmission technologies, we've already done quite a bit of work in that, looking not just at very high voltage technologies, but also some of the switching technologies that can have an impact there. Hydrogen as an energy storage mechanism. So hydrogen, not necessarily for energy storage in areas where lithium-ion batteries are clearly the contender, but for much longer duration storage. So this would be more for seasonal storage. I have to say the costs at the moment look very high on our analysis, so there's a real challenge to get those costs down, but we're not saying that won't happen. Blockchain in energy, very interesting because of the potential for things like trading, but also smart contracts, so to automate some of those trades. The industrial Internet of Things, we think, is a very real thing for energy and is going to help with this challenge of improving asset utilization, predictive maintenance, and so on. With all these decentralized energy resources, how do you actually manage them? How do you monitor them? How do you control them? How do you get the best value out of them? And there, software solutions are starting to play a very important role. Another, much talked about technology, machine learning and artificial intelligence. At the moment, we think this is very relevant. We're seeing it in a lot of the IoT applications already. And it's things like techniques for advanced pattern recognition, optimization approaches where that can feed in. And then finally, microgrids. We've looked at microgrids initially more in the developing world. By the way, another thing we've done very recently is we set up a team at BNF to focus on what we called it frontier power, but it's off-grid and related areas. And microgrids are already starting to play a role there, but we think the same technologies could actually come back and be used in a very real way in the developed world, for example, in campus-like environments. We see a lot of corporates building out energy for their own use in the US and increasingly in Europe, and microgrids could be part of that solution. So those are the new areas. Very happy to talk to any of you about those, and thank you very much.